Welcome back, everybody. Today we are taking a look at Shopify, ticker symbol SHOP. If you are not already aware of Shopify's business, they consider themselves the future of commerce, which actually isn't too far off. They do operate a platform that allows companies to have a large e-commerce presence. So whenever you buy something from a store online, there is a chance that you're buying from a company that uses Shopify to create their online store and to fulfill their orders. Shopify's most recent revenue report was $1.7 billion, which was really great, up over 25% year over year. And since the company's inception, they've generated a global commerce revenue of $812 billion. And what I find most interesting is that this only represents about 10% of the US e-commerce market share, and the company obviously expects further penetration. I don't know if that'll actually take shape or not, but they certainly seem to be on the right path. In 2022, there were over 560 million individual online shoppers, and transactions occurred in over 175 countries. So Shopify truly is a global business, and as we've seen from the US market share, there's clearly a ton of growth left for this company to achieve. What is also interesting is that Shopify works with brands of so many different sizes. They have entrepreneurial type brands, which are, typically very small businesses that have maybe one or two owners and are just starting out at earning their revenue. And they work their way all the way up to these larger brands that I'm sure many of us recognize, like Gymshark, Nestle, Heineken, etc. And what is really nice about Shopify is that they do offer solutions for all of these ranges of people, and they are able to quickly upgrade an entrepreneur to a small or medium business to a larger brand as the company grows. So Shopify has solutions for all sizes of companies, and they're able to evolve and adapt their platform depending on how large the brand is, and they can grow with the brand. But as always, what will be most important for Shopify's bottom line is probably these larger brands with some small and medium businesses thrown in there. So we are going to want to see, one, more large brands come onto the Shopify platform, and or two, more small and medium businesses grow into larger brands and stay on the Shopify platform. That is what I think is really going to lead towards long-term growth for Shopify. Not so much an introduction of the entrepreneurs, just because they don't bring in a ton of revenue. And so just to highlight some of the larger brands that Shopify works with, as these are their most important and profitable users, we have companies like Gymshark, like we talked about, Molson Coors, the beverage company, Bauer, which is a sport company. Mr. Beast is big enough to make it onto this list, so good for him. Skims, Fashion Nova, Steve Madden, Nestle, etc., etc. So lots of large brands. And of course, a big thing is going to be paying attention to the different companies that Spotify is able to add. So these are their Q3 brands that they added, none of which I'm terribly familiar with, but the important thing is that they continue to bring in these larger companies onto their Shopify platform. And we will be going into their financial numbers a little bit more in depth in just a couple minutes, but I did want to point out that their monthly recurring revenue has been growing really nicely at over 30% per year for the last 5 years. And what makes recurring revenue really, really nice is the fact that obviously it continues to come in month after month, year after year, and it is quite easy for companies to predict. So this recurring revenue will bring more stability to Shopify's revenues in the future, and it should also help for stock forecasting and things like budgeting, which goes into like operating expenses, which we're going to look at next. And yeah, I know operating expenses and operational efficiency is not the sexiest thing to talk about for stocks, but this I think is actually the major problem with Shopify. And that is because even though they say they are committed to improving their operational efficiency, we can see that they've really gone nowhere since 2019. So each number in the green bubble here shows their adjusted operating expenditures as a percentage of their revenue. And so we saw a really, really good improvement between 2019 and 2020, 2021, where it dropped from 53% to 39%. But unfortunately, since then, it's just come right back up to 50%. And so I haven't dug too far into why their operating expenditures have been fluctuating so much, but this is the main reason that Shopify continues to struggle to be GAAP profitable. And so in order for this company to continue to grow and to eventually reach a strong and steady GAAP profitability, we're going to need to see this operating expenditure start to stabilize and shrink as a percentage of their revenues. On the right here, we do see a good trend dropping from 44% down to 37% in the Q3 of 2023. But of course, as the left side of this chart shows, 1 year really doesn't tell us much because Shopify's operating expenditures do seem to change quite quickly. So yeah, I hope that quick detour into operational efficiency didn't put you to sleep. But before we get into the financial numbers, I do want to ask that you please like this video and subscribe to my channel, as it really helps me out as a small YouTuber and it lets me know what kind of videos you guys want to see in the future. As always, thank you so much for watching this video, and let's get into those financial numbers. Revenue growth has been exceptional, growing at over 55% per year since 2018, meaning the company went from just about $1 billion in revenues in 2018 to just about $6.5 billion 5 years later. That is really incredible growth, and if the company can keep even half of that growth going, there could be some really good returns in the future for shareholders. What is not so pretty is their EBITDA, which, due to operational efficiency issues, has been mostly negative except for 2020 and 2021. Non-GAAP operating earnings have shown really great growth, going from 5 cents per share in 2018 to 95 cents per share in the trailing 12 months. Even with a hiccup in 2022, that still represents a 109% compound annual growth rate since 2018. Shopify's gross margins have been steadily declining, though I do want to point out that it's only going from 55% in 2018 to 49% in the trailing 12 months. So this isn't a huge drop, but it is something that we would like to at least see stabilize over the next couple of years. And once again, due to operational efficiency issues, we've seen the operating margins fluctuate wildly. And in general, this number has been negative, meaning Shopify is not generating a GAAP profit. So this is definitely something that we would like to see improve in the next couple of years. And I do think that Shopify will be able to become GAAP profitable fairly quickly as long as it has the desire to do so. Return on assets tells much the same story, although just to a slightly different extent. So I'm not really going to cover much else here. Total shares outstanding have grown every single year for Shopify, so that is a bit of a caution flag, though I do want to point out that the amount of dilution every year has slowed substantially, so hopefully that is a good sign of maybe a pause and eventually the start of some share buybacks in the future. The company's cash and short-term investments have grown really nicely, and it currently sits at about $5 billion, so this company definitely has a ton of money just waiting around that it can invest however it chooses to do so. Debt has grown marginally and currently sits at $915 million, so this is really nothing to worry about as Shopify's cash on hand could easily pay this off at any time, so I'm really not worried about the company's leverage. And just to kind of prove that point, we can see that their annual net interest expense is a positive $200 million, meaning the company earns $200 million in interest even after it's paid all of the interest on its debt, so I really see nothing to worry about from a balance sheet perspective. Free cash flow has grown nicely, and on a per share basis, this growth looks much steadier, and hopefully this remains a stable grower for Shopify. Moving over to our PE chart, we can see that Shopify's average 5-year PE is 343.33, which is represented by this red line here. Although if we follow the black line, we can see that this has fluctuated a ton, basically due to the fluctuation in Shopify's earnings over that period of time. So currently the company's PE sits at 84.55, which is well below its average PE, although I do think that the major fluctuations in PE over time has basically made any sort of value assessment from this chart useless. If we move over to the value chart, we can see the fair value PE is currently set at 109, which would be the previous 5-year growth rate of the company's earnings per share. But what is really messing this chart up right now, making it difficult to read, is the fact that the projected compound annual growth rate for Shopify is 204% for the next 5 years. Now, I do think this is highly optimistic, and I do not want to discount this, but in order to see the graph a little bit better, I'm going to lower this just to 20 so we can see the chart. And now that this is in a better view, we can see that the fair value for Shopify has fluctuated quite a bit, going from $88 in 2021 down to $5 in 2022, and currently sits at $103 if we use a fair value PE of 109. Compare that to the closing price of Shopify at $80 per share, and this means that there's quite a substantial upside for Shopify if it does continue to trade at a fair value PE of 109. But do be careful, even if the company continues to perform well, the fair value PE could drop to something like 50 times, which would still be exceptional growth. But as you can see, that would really alter the fair value of Shopify's stock price. So it is something to be aware of, that a fair value PE and a re-rating of what that fair value is can change quite rapidly in the stock market. So that would be my one warning on this company. And I think 2022 is a perfect example of that, going from $170 a share and plummeting all the way down to about $25 per share. And so for my final thoughts on this company, what I really like is that Shopify has truly become a backbone of online e-commerce. And they're a backbone for many different types of companies, from small businesses and entrepreneurs all the way up to some of the world's largest brands. The company also has digital trends working in its favor, because obviously as the internet grows and the Internet of Things grows, a lot more of our transactions are going to occur online, and I think Shopify is perfectly set up to not only benefit from today's online transactions, but also the transactions of the future. And so obviously that means that this company has excellent growth expectations. Like I showed, Yahoo Finance believes that this company's earnings per share are going to grow by 200% per year for the next 5 years, which is absolutely mind-blowing. But as always, I do try to find things that I don't like about a stock as well. And first and foremost, Shopify's profitability and control over their operating expenses remains elusive. If the company is able to get back to what it did in 2020 and 2021, I think they could become profitable very, very quickly. And that would obviously lead to a massive run-up in the company's stock price. But of course, it kind of remains to be seen whether or not 2020 and 2021 was just a flash in the pan that will never be achievable again, or if 2022 and 2023 was just a bit of a hiccup and Shopify is going back to that 2020 and 2021 stage of profitability. I don't know, but it is definitely something that you have to be aware of when investing in this company because they have shown no record for stable GAAP earnings. And second, the valuation of this company implies a ton of future growth. And obviously, that's warranted. When you have people expecting 200% growth for the next 5 years, you would expect a very high PE on a company like that. But if that growth does not come to fruition and maybe Shopify only grows at 20%, which is still excellent growth, we will definitely see a re-rating of this stock, and the stock price could plummet much like it did in 2022 just because there are such lofty expectations that are very difficult for the stock to live up to. So with that, guys, I hope this video was useful. Please remember to like the video and subscribe to my channel, and definitely make sure to leave a comment down below on your thoughts about Shopify, as well as any other stocks that you would like to see analyzed. Thank you for watching the video, and I hope you guys have a wonderful day. Bye.